Welcome to the Thompson Entrepreneurial Education Magazine, where we showcase the best insights in education, enterprise, media, and finance. Today on the series, we're talking finance. I am Bello Mohamed Tongo, the CEO and founder of Thompson, and I have with me today Ms. Halima Ibrahim Abba. Halima's CV and profile and portfolio of work cuts across the field of finance, investment, and to a certain extent, even banking. She has worked in so many different companies in and around the country and the continent of Africa, from Goldman Sachs, Nomura, African Finance Corporation here within the continent, and so many others. I'll give a small opportunity for Halima to introduce herself so that we know really what we're about to get in this exciting and interesting insight into the world of finance. Ms. Halima, welcome.
Thank you very much. Thank you for having me. I think it's an absolute pleasure to be here. I think you may have slightly overestimated what I may have to say to the audience, but I'm very excited to be here and to speak more. Currently, as you rightly said, I currently run PIF Africa, which is a Pan-African firm that's focused on investments, consulting, and advisory, and we focus on Africa's sustainable socio-economic development. So really leveraging these three pillars to be able to do that. Prior, I was at the Africa Finance Corporation, as you mentioned, as an associate vice president within the investments division, and have done quite a bit of interesting work there, which I'm sure we'll dive into a little bit today. Much of the focus there has been on infrastructure and industrial solutions for the continent. And before that, pure investment banking in some of the largest investment banks, as you've mentioned, Goldman, Nomura, and also JP Morgan. So very interesting, I think, for me. But also, I bring a bit of development and law and policy into my work as well, because I think they're all very intertwined and quite critical. So, and some of the questions I'm sure we'll delve into today, we'll speak to that. So that's about it.
This is the reason why I said it's better you introduce yourself actually, because actually, even with this that you've given, there's still a lot more that you have showcased in terms of your insight into this important topic that we're about to discuss. Now, I think let me start with, it's always good to speak about background and where someone is coming from before even we talk about where they are now and where they are heading to. When we talk about anything that we do in Tungsten, um, the competence of a person speaks to what they are doing right now, especially when it comes to success. And for doing right now, especially when it comes to success. And for you, and I'm very sure that a lot of what you've been able to achieve in the field of finance has to do with your education and the competencies and experiences you have acquired from all parts of the world. What extent or what measures do you think, in terms of even in terms of importance of financial literacy, not just for people like you that are in the finance industry and etc. and banking and all that, but just the general population of the world. You keep talking about, or we keep talking about socio-economic development. That economic development side has to do with financial literacy to a certain extent. So, what measures do you think or do you see that needs to happen or that is of importance as far as financial literacy of the population is concerned in order to be able to actually achieve that economic development that we all hope to achieve?
No, thank you very much. I think it's interesting you say that because finance is everywhere around us. It's just about money at the end of the day, and flow of capital from place to place, where it's needed and where it's being supplied. And that goes back to the two subjects that, well, at least one subject we all did in school, which is math, at the most basic form. And then it sort of graduates up into commerce, business studies, economics, that we did maybe at the more advanced level, high school or secondary school, depending on which part of the world you come from, and then into sort of the more advanced courses. So I think I would start there is by saying that it's actually quite basic in that most of us have that platform, to be able to learn, like I said, the basics of math. I think where maybe more needs to be done is to help people see how math shouldn't just be a theoretical thing, but can actually be applied to your day-to-day. Whether it's you budgeting to buy yourself a new laptop or a new game console or sweets or a dress, or something, a toy as a young person, or it's about investing in your own education or looking at how you can put some money away So many
Like
of us
savings.
grew up savings. So many of us grew up having like a piggy bank, as they call it.
They call it a susu.
Yes, as exactly, or susu, different forms of it, and it may not be earning a return, but you know that you've put it away for something bigger. So it starts with those little things, but I think that it needs to be formalized and maybe more deliberate, and that's where I would say the first approach should probably be looking at how our curriculum is structured today. So instead of leaving math, economics, business studies, all these subjects that we all do as very theoretical, why don't we make it take it to the next level, where we teach people concepts around budgeting, around investments, around savings, around even how to spend their money, the difference between an asset and a liability, how things around you, the basic things you have can be an asset. If you are, for instance, a young girl who knows how to, or even a young guy who knows how to bake or cook or something, the pots and pans in your house are an asset because you can use that to actually make food, and sell that to make money, for instance. So even just at that basic level, helping people see those connections between basic things that they may not take very seriously, but taking it to the next level, I think would be a critical first step to improving their financial literacy. I always say this: the bankers, use a lot of jargons because they want to turn something basic into something complicated to justify their huge salaries. Because I'm sure you know this, but finance people probably are probably in one of the highest income brackets around the world, and I think we've been bashed for that a lot. But we complicate it, I think, a little bit just to be able to make it look like it's funky and difficult. But at the basic level, it's actually very straightforward. As I said, it's just about money moving from place to place. A second thing I think that can be done, that will be very interesting, is financial institutions doing more awareness programs, workshops, seminars, sessions, and it can be in different forms. It can be to different categories of people who are maybe in the more vulnerable groups. It can be for professionals who are thinking about how should I invest my pension, how should I invest the money I have from my salary. It could be for kids at the secondary school or high school, whichever level, up to tertiary. It could be for people who are in the informal sector but own businesses, so they can do different things. And I think it's not CSR. We shouldn't think of it as CSR. I think for the banks and other financial institutions, it will be a huge new market, to enter into, because today these financial institutions offer investment products, but not many people actually put their money into those investment products because they don't know. With as little as 5,000 naira, you can actually invest even in a bond, in a financial institution. But people don't know this. They think for me to buy a treasury bill or a bond or a stock or whatever, I need to have a 1 million naira, 2 million naira, $1 million, $10,000, whatever. But actually, you can invest with this very little money, right? So I think if the banks do that, it will help them open a new market of new people that can be customers of the bank through their investment products that they have. So the seminars and workshops I'm proposing are not for free purposes. It's actually a commercial, it's actually a strategic move from a bank to be able to do that, because then it means that you are helping people see that they can put some of their money away with you. They can educate you about different instruments. They can explain to you what it means to have different types of risk appetites. If you are a young growing couple, or if you're a young person in industry, or you have an elderly person that's about to retire, what type of products should you put your money into? Those basic things, I think, at that level can actually be done. And like I said, it's a strategic thing for the banks. A third thing I think is for the likes of the central banks within countries, and also the ministries of finance and their relevant agencies to fund public awareness campaigns also on the same thing. Helping people actually put money away, rainy day, concept of insurance, concept of exactly investments in government instruments, differences, depending on who you are. I think even just doing that on radio, on TV, and getting some of the media houses to be part and parcel of that, I think is very useful. I think media houses are trying to do some good work there. You have business channels, for instance, where you see them talking about business, economy, but it's very abstract. Again, like I said, I think the way they communicate, it needs to be very relatable to the different audiences. Yeah, I think those are probably maybe three key things I would say that if we do better, it will definitely enhance the level of financial literacy.
Right. Yeah. I think for me, in my personal journey, I would say my financial literacy or my financial education began at age 15 or so in secondary school. At any experiences of yours. For me, it was learning from my mother about the stock market and trading and all that. For you, how how did yours begin in terms of your financial literacy, learning about money? I always say, why isn't money being taught in school when it's going to be one of the most important things in adulthood? So for you, what was your personal experience in terms of beginning your financial literacy and even to the level that you became as financially literate as you are right now in the work you do?
Mm. That's very interesting. I don't think there was a one moment, but I think it's also partly my upbringing. So I grew up in a very strict household where you don't just get anything for the sake of it. You have to do something to earn something. And it can be as little as a box of Ribena, for instance, but it was really about incentives or rewards for good behavior. Whether that's like scoring an A in your test or saying a good word to somebody or things like that. So I think that's when I started being aware of the concept of things having value and you having to, work for them to get, something that is valuable in return, right? So it started like that. And then I also come from a very prudent household where, you kind of have to be careful how you spend money. Money was something that was taught very early to us that you needed to appreciate the concept of. So when I moved to the UK, I think that's probably where was the first turning point for me, because then I had to live on my own. I mean, I lived with my sisters, but I had to be responsible for myself. And my sister, bless her heart, required me to budget, like to put together a budget. How much are you spending on a bus pass? How much are you spending on food every day? How much are you spending on entertainment? How much are you even spending on your hair? Where do you even go to for those basic things, right? So I started off not liking her very much for making me do that, but I came to see the importance of just even the concept of budgeting then. And because I suddenly didn't want to keep answering to her, especially when I wanted to go out with my friends, decided I was going to get my first job. So I applied for my first job. And I was like, even if it's £50 a month I'm getting, it's my money, I can spend it how I want, right? And I remember the first day I got my paycheck, and I waved it in her face like, in your face, I don't have to ask you for money anymore. Exactly, financial freedom, exactly. And I don't have to, account for this money. And I sat down thinking, okay, how do I spend this money? And then I suddenly realized I didn't want to spend it. I wanted to invest it so that I can have more next month and no more next month. So I guess that thing she made me do in the beginning helped focus me, but it then also helped me see the importance of making money and having to grow money. So that's where the concept of investment came, right? And then I started looking at, I went to my bank and I said, how can I put this money away? And my bank said, okay, you have a few options. And they said, there's, stocks, there's bonds. And I was like, I don't know what these mean. And they said, okay, well, this is what they mean. And they tried to explain to me and they said, do your own research. So I go, I Google it, I read about it, watch videos on YouTube. And I'm like, okay, this makes sense. This is very interesting. And then I started to watch things that are happening on the news. I took a lot of interest in economics. I always liked economics as a subject, even in secondary school, and I was taking it in my A levels. And my teacher gave me a different perspective about how to think of economics and money and all of those things. So she'll come to the class and say, oh, the Bank of England raised interest rates. What does that mean? And everybody's looking at her blankly. But, she forced us to start thinking about the connections, down to even the bottle of milk that you buy in the supermarket. So that helped my awareness. The financial literacy improved then. And I started to connect the dots with all these conversations. And then I made my first set of investments. And then I started to see how my money was growing, even leaving my money in the bank account. When I see the interest, even if it's £2, at the end of the month, it's still something on top of what you had.
Everything meant.
And I began to understand, yes, what those things meant, because I did a lot more research also on top of that. So it was an additive journey. And then, of course, I discovered investment banking, and that's when I did my first internship at JP Morgan. And then it opened my eyes even more. And the process of being a banker also required me to do a lot of reading, understanding how economy works, and all of that. So it was a further reinforcement. So I would say it wasn't one thing, but it was the deliberate actions, I think, of maybe my parents helping me see the value of things and money, the budgeting incident with my sister, then having to get a job and knowing what it meant to work for money, then having to put the money away, then having to go to the banks to ask them how to put the money away, and then, my classes in economics. So it was, but I think for young people now, it's not as difficult because information is so available. So I would encourage people to leverage on AI tools, to leverage on YouTube, and just Google it. You know, there's so many videos that have been created about those things. You know, just Google it, just read about it, you know, and it starts there, I think.
Yeah, that's very good. You mentioned something very interesting, which has prompted my next question. You said AI, right? From what we know generally,
Yes.
in business and even in your field, the past 10 years, two things, especially of recent, have caused a kind of disruption around the world. But in particular, now let me speak about a key sector or industry of the world, which is where you exist in finance, banking, investment. AI, artificial intelligence, and blockchain. How has its existence affected the industry? And in particular, what do you foresee the role of these two forms of technology in finance, banking, investment, and everything that you do?
I think in several ways, actually. So traditionally, when you think of finance and banking, it's a very people-focused business. It's very rigid, very bureaucratic. There's a lot of people in the processes, approvals. You know, so it can be pedantic, and it has typically not been too accessible to the average person. You know, you kind of have to have a level of sophistication to interact with bankers, and it shouldn't be like that. And I think this is where AI is definitely going to change things. It's, I would first say, decentralizing finance in many ways. Because as I said now, you don't need some stuffy banker in a nice suit to explain these concepts to you like I had to. You know, you can just simply Google it, as my nephew would say, or you can AI it. Exactly, you know, you just use ChatGPT, Gemini, whatever, you know, and you'll be able to get all the information. So I think in that sense, decentralization is key because we really need to make it easy and straightforward. Like I said, we have to break it down into the most minute, most practical, you know, form of application for the average man. And I think that's what AI is able to do now, which is one. Second thing is, I think having AI, also blockchain technology, is helping to create new financial products that people don't have to understand too much about economy to be able to interact with. So for instance, now you see many people having crypto accounts. We would never have seen this before. But now with that, people don't have to understand the fundamentals of Bitcoin to buy a Bitcoin. You know, it's just a form of investment for them. And they can trade it easily. They don't need a trading license. Or when you see some of these FX trading companies, you know, that are doing mass promotional work to show people that you can also trade USD, Euro, USD, and whatever. But you don't need to actually have a license to trade. Whereas 20 years ago, in fact, even 10 years ago, you couldn't easily do that. Like, you had to go through proper training to be able to trade. So I think AI and, you know, blockchain technology is helping to, as I said, decentralize finance. The second thing is it's helping to reduce the bureaucracies that we see in financial institutions. It's nice to see, just in Nigeria as an example, that the average trader, a petty trader who has no form of formal education, can have a bank account and can be, you know, saying, oh yes, transfer it to me, use my POS or whatever, my point of sale machine. And they don't have to go through all that paperwork that a traditional bank will require them to go through, which they will not be able to access because, as I said, they don't have proper education, for instance. Or we see the likes of mobile money instruments, for instance, in the likes of Kenya. You know, again, the average trader can just send money on a mobile phone and not have to worry about anything else. So I think it's helping to open a whole new market in terms of financial inclusion for people and making us more efficient, less bureaucratic, less costly with the way we deploy finance generally, and for people to also access it for business, for, you know, scholarships, for all sorts of things, consumption here and there. I think also it will potentially enhance the customer experience. So imagine being onboarded by an AI. So I no longer have to fill forms in a bank to open a bank account. It's just somebody just talks to me, and the AI actually takes me through step by step what I need to do. and if I have an issue, I can just talk to a chatbot. We're seeing that now. So you're also cutting costs in terms of having physical people sitting there, taking customer complaints, dealing with issues and all that. So I think it's going to make us more efficient and enhance the customer experience, make things easy, put the power in the hands of the customer rather than the supplier or the vendor. I think another interesting thing is in terms of even anti-money laundering, KYC, fraud detection. There's going to be a huge space here due to AI. Previously, you would have to manually verify people, but now you can use digital identity tools. You can use people's biometrics, their faces, their voices, all sorts of things to just verify them, so that you cut out all that inefficiencies of having a physical person doing something. And because it's a robot, or software of sorts, you can't manipulate it easily like the way you would manipulate an individual. An individual can be bought, and instead of saying yes, this person, this is what it is, they can change their recommendation if they've been bought. So that's a fraud situation. But if you have an AI that has been programmed to say, if you see this, flag it, that's what it will do. Unless on the back end somebody manipulates it, but the chances that would happen is very slim to none. So I think in terms of fraud detection, handling things like money laundering, all of these things, I think there's a huge space here, cybersecurity measures, and then also just helping us, I think, become more compliant as a world, and cutting out some of those mundane tasks so that the human brain, human intelligence can be focused on the things that AI may or may not be able to do in those cases, and we can add more value in the system rather than creating the kind of, as I said, inefficiencies and bureaucracies that you see in finance. So I think those are the things I think that AI can really help us with.
You seem to be speaking more positive in terms of value addition of AI in this space of yours, but some would say it's actually a risk in terms of jobs.
Yeah.
Just my previous question was about competence and financial literacy so that you can exist as a professional in this space.
Yes.
However, now you're saying AI can do some of those things. So are you trying to say that the level of financial literacy doesn't need to reach that level? I mean, that what you were required to do when you were coming up in terms of learning about finance and etc. is not required, or is it that you yourself won't be required? So where is the risk in terms of that? Because that's the typical thing that one will say when they hear some of the things you just said now about what AI can do in the space of finance.
I mean, I hear you. That's definitely a concern that people have, but I think it's a push for people to be more valuable, actually.
In other ways.
In other ways, exactly.
That the AI cannot
that
be
AI cannot do, exactly, because AI will never replace a human being. It's not possible. What it's doing is it's helping, I think, to reduce inefficiencies, to reduce costs, to improve processes, to automate certain things that, frankly, if you leave them the way they are, you're actually creating a greater risk and a greater ill within the system. So creating more systemic risks. So that's what I would say it's doing. So if people see that that's the case, then they should pivot to see how they can complement what AI is doing. To see, okay, using the output of what AI has now done, how can I leverage on this to actually be able to create more value or do more? Because ultimately, when I think of some of the projects I was doing, AI may be able to help me build a financial model, right? It may even help me interpret
the financial statement.
The financial statement, right? Yeah. But once I have the output and it's calculated to me what the internal rate of return is, what the debt service coverage ratio is, I still have to carry that and be able to take it to put it in a legal documentation, right? Now, again, I could use AI to also create the agreement that I have, but I also need to know what I'm looking for, right? Because every situation has its own circumstance. If I'm building a road in, I don't know, Rwanda, it's a very different landscape to building the same road, the same length, same everything in Malawi, in Egypt, in Poland. So somebody has to physically be there, sort of making those connotations and being able to say, okay, in this particular agreement, due to specific laws or whatever, that this country has, these are the things I have to input, or due to some of the requirements that have been given to me by the Ministry of Finance, I have to also incorporate it in the agreement. Even when I've gotten the agreement drafted, I still have to go physically or virtually and sit in front of a minister of energy and, Minister of Transport, and negotiate that agreement with them. The AI cannot do that for me. So there are several things. So you see, what the AI in this example has helped me do is cut the hours I would have spent sitting down building a financial model and sitting down analyzing a financial statement. I'm just using the output, to go and do the value adding work that the AI cannot do for me. So instead of thinking, it's a threat, I should think, how do I move up the value chain and use what AI will give me as an output to be able to do more and be more efficient or be better or whatever. So I think the fear is, honestly, if I'm being absolutely blunt, is coming from a place of uncertainty and people also not wanting to push themselves to grow and to improve. But that's, I think, what AI is going to do. It's going to force people to have to sort of level up, if I can call it that. And, the pace will also be different. In some countries, adoption of AI will be slower. So it will take much longer. So you will still need some of those mundane things to still exist because of structural issues or deficiencies within the system. So I don't think the adoption of AI and this fear of replacement of jobs, even in that sense, will be as accelerated as people think. Maybe in the West, true, but in the developing and emerging markets, I don't think so quick. But in any case, once it gets there, it's for people to upskill, reskill, and pivot themselves to be more valuable.
Which takes us back to what we always say.
Exactly.
Education is to be continuous and all
continuous.
That.
The day you die.
Yeah, so that you adapt to all these changes
exactly.
that you're saying, and you won't be redundant.
Yes, exactly.
Or irrelevant to your industry.
Exactly.
Yeah. And now, for me, as an entrepreneur, when I'm listening to you, I'm not just thinking for myself in terms of my personal finance and etc. But the biggest thing for me as an entrepreneur, just like many other entrepreneurs and business owners, is the business's finance,
Yes,
so to speak.
very important. Yeah.
And more these days, as you see around the world, entrepreneurship has become the main thing now. It has become almost like a lifestyle.
Yes.
I'm an entrepreneur, I'm doing entrepreneurship, starting businesses, and etc. That's what everybody wants to be able to say today and in the future. But a key thing that entrepreneurs face, even we see with the investing companies that we're trying to go into in Tungsten, is the financial aspect of their businesses. So they have great ideas, great people, and all that, designs and all that, but the financial blood, if I can say that, of the enterprise that they are building is always flawed. And if you ask those entrepreneurs, one of the key things they'll say, I need more funding and etc. But the system is already flawed. So whatever funding you put will leak and etc. So my question, what I'm trying to head to is in terms of businesses or enterprises now, whether they are startups or existing or large scale and etc. How would you say that businesses can really thrive these days with every economic challenge that's happening right now, recession, this, that, disruptions by blockchain, AI, and everything in terms of the financial need of a company or a business? How would they thrive in the current situation of things? And also, how would they be able to navigate some of these challenges and uncertainties and whatever is going in the macroeconomic sphere?
Yeah. No, absolutely. I agree with you. It's a key area. But I would maybe let's even pick up on the last thing we were saying around AI and digitization generally and automation generally. I think again is for people to see it as an opportunity, not a threat.
Right.
Because again, as I said, why do these digital transformational tools exist? They're tools to help you become more efficient, cut costs, generate more revenue, see a new market, get new customers, make a business process more efficient.
Everything to do with profitability.
Everything to do with exactly profitability and even enhancing your influence, in many cases, or even being more valuable. Because you've cut bureaucratic processes here and there, you could present more value to your customers. So I think this is how businesses should look at it. They should sit and look at the entire value chain of the business. At each step, when you think of product design even, development, thinking about the market, the customers, how they behave, how they buy for things, what they want to spend money on, etc. Location that they're in, the regulatory environment,
the human staff.
Even the team members, exactly. everything you can think of, which I think is all of the aspects of an enterprise, as Tongson would put it, or even looking at the media or finance, and as you said, the education side, even for your own team members within the organization, and for yourself as an entrepreneur. It's very important to look at these forms of digital transformation tools alongside all that value chain. So how can I improve every single aspect using technology? This is the first thing. So instead of thinking, it's a problem, you should say, how is it an opportunity? So if I have AI or if I have some technological tool, as an example, can it allow me to not have to recruit certain types of people that are costing me money and therefore reducing my profitability in this difficult macroeconomic environment we're in? Using technology, can I access more vendors that prior I was only relying on this one vendor in my locality, but because of certain platforms or the Amazons and the Jumias and the Fivers of this world, I can now see vendors that can do the same thing, even if they're halfway across the world, and it's cheaper for me. It's more efficient for me. They'll deliver faster. So I outsource that piece of work to them instead of dealing with only this one vendor who keeps disappointing me every now and then. So suddenly you've improved something and you've reduced your cost, you've made something more efficient. Or how can I leverage on social media tools to access a new market of people that today I don't see because I sell out of a shop, for instance? Or how do I recruit better staff? Because now I have access to Jobberman and Reddit and whatever, all these tools, Millground and the likes, so now I can recruit people from all over the world, all over the continent, all over the country. So it's looking at how you use technology to improve the business towards the value, influence, and the profitability that I think Tongson is talking about in its, Tongson is talking about in its important work that it's doing. So I think that's one for businesses to do, leveraging on technology. It's everything. How do you transform your business? And it can be the most basic thing. In fact, it can even be you're selling bean cakes by the roadside, and you're thinking, if I want to be more efficient with how I take payments from people, how about I get a money point account and I get a POS? And I also say, let me check on Google Map and see what kind of businesses are in the 1 square mile radius or whatever around me. And I see there's an NGO, there's this, and I say, okay, I will send my young daughter who's in senior secondary 2, which is the equivalent of Form 5. So she's 16, maybe 17, fairly okay. Near an adult, she can go around to the different offices and say, there's a small bean cake seller, just 5 minutes away from you. We can be supplying you breakfast if you want. And then they're like, okay, sounds good. Okay, we can do deals for you. So if 10 people in the office want to order, we can give it to you at a discount. We'll bring it in a nice packs or whatever that you can eat it in your offices. So you don't have to come to our spot, if I can call it that. And suddenly, and then you say, you can also pay in advance. I can send you my money point account. You just transfer it to the money point account. Or if you want, I can bring the POS every day and you guys can pay with your card. Suddenly, you've used digital tools. You've used the point of sale system. You've also used Google Map to see new customers. Now you're making more money. Profitability. You've become influential because everybody knows the bean cake seller. And there may be other bean cake sellers in the area, but you were smart to do that. So I don't think we should think digital transformation is for some educated, white collar, some, serious. No, it can be for even something as small as you were selling bean cake by the roadside and you're very uneducated, but you've been able to use that. So I think this is a very powerful thing that businesses must not forget and must really look at how they can leverage on. One. Number two is every banker knows this, cash is king. Nobody cares about the revenues you're posting, net profit, whatever. None of those things are cash items. Cash is king. So you have to look at your cash flow statement. Unfortunately, most businesses focus purely on their income statement. And if I'm going to explain it to the basic person, the income statement just looks at few things. I'll highlight the key things. Your sales, your costs, And your costs can be fixed, they can be variable, so it can be the building, the rent you're paying, it can be machinery that you've spent money on, it can be utilities you're paying for, light, water, you know. It can also be, you know, the raw materials that you're using for whatever it is you're doing. So if you're a baker of a cake and you have to buy flour and milk and all of that, right? So that's your cost. And then if you've taken any loans, it's the interest you're paying on those loans. If you have any assets that you have bought, you know, like the scales and the machines or whatever that you're making your cake with, then you're also accounting for that in your income statement. Now, this is a useful tool to keep a track of your business. But you must remember that from an accounting perspective, you will recognize these costs and these sales as they happen, but not necessarily when the cash comes in. So I can sell, I don't know, an airline, British Airways. I can be a British Airways vendor. And I sell British Airways bottles of water that they have on their planes. And it was a £10,000 contract, just an example. And we signed the contract. I supply the water bottles worth £10,000. But British Airways says we process all invoices within a month. So you'll get your payment at the end of the month. Today is the 6th of March.
But you've already delivered.
But I've delivered. Okay. So it cost me money to put those bottles, package them, put them in a car or whatever, and send them to British Airways catering service provider. Yes. And British Airways has put it on their planes and they've supplied it. Yes. In fact, my friend recently traveled on the British Airways flight and they probably drank the water. Okay. Yeah. But I have not received the money. In my income statement, I go and say, I've made sales of £10,000. But, and then in terms of costs, I have to also mark the costs that I incurred. So let's say it cost me 6,000 to supply that 10K, right? So I go and put it 6K. But in my cash flow statement, it's zero. There's no cash. No cash is coming. In fact, I'm negative because it's cost me £6,000 to put that thing together. So I'm at a loss.
So cash has flown out, but
it hasn't flown in. Yes. You know, but most businesses don't track that. They just focus on the income statement. Oh, I've made a profit of 4K, 4,000. This is what they see it as. Yes. Now, between the 6th and the 31st, I'm out of cash. Yeah. If I want to supply KLM or Emirates, the same thing, I'm going to struggle because I don't have any money in my account. And it's going to cost me another £6,000 to supply Emirates. Yes. Emirates will also make the sale. I'll make the sale with Emirates, but Emirates also says I have a 1 month time lag. Yeah. So if I supply Emirates, maybe by next week, I have to wait till middle of April. Now I'm out £12,000. Yeah. So, and this is how a lot of businesses fail. Because because they don't have the money, they can't supply new customers. So there's a working capital issue there. There's a gap, right? Time lag. Or something catastrophic will happen in the world in that period. That will mean that they suddenly now need to incur more costs, but they haven't received the £10,000 to cover the cost. So they struggle, and then they give up when it compounds, right? So you have to keep a track of that. If you know British Airways will pay you £10,000 at the end of the month, it means you have to make sure to be in a position where you can supply Emirates. You need another client that should have already paid you money so that you have enough cash to use for it. Exactly. Or if there's a vendor you have that does logistics for you, whatever, so that's 6,000 you have. Yes. Let's say £2,000 is logistics cost. Let's say 2,000 of that is the bottles, which you don't make. You only make the water, but you don't make the bottles. So maybe you can give a call to your logistics provider and say, please, the 2,000 I'm supposed to pay you, can it wait till the 31st? When I receive the money from British Airways, I will pay you your 2,000. You make the same call to the bottle maker and you say, well, can it wait till the 31st? When I receive the money from British Airways, I'll pay you for the bottles. So you've now delayed 4,000 of the 6,000 cost. and you only needed to incur 2K because that's the actual cost of the water. So those kinds of strategies are very important. This is what they call cash flow management, working capital management, whatever you want to call it, the technical term. But this understanding by a business is very important. How do you delay your costs? How do you enhance the cash component of your revenues to make sure you're collecting as much cash early and you're not waiting too long to be able to get cash? And even if you have a big company, like British Airways will tell you, I can't pay you till the 31st, is a policy. How do you then start selling to other customers who will tell you the same thing? Who will pay you straight?
So that it covers this.
So that it covers the time gap that British Airways has. So these are sorts of things that you need to think about as a business, which businesses today don't just apply their minds to. They're just always thinking sales, 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 and then they have no understanding of their costs. They also don't know how to price, which is a problem. So they don't think of all the costs that go into their businesses. They just think of the high-level costs, like the bottle, like the logistics. But they don't think of their time, because you need to get paid as CEO. You have to pay your staff, the electricity, the rent. And it often is like that for many small businesses who maybe don't pay for certain things, so they don't cost those things. So for instance, I'm baking cake in my mother's house. My mother will never collect rent from me. Well, she maybe not. I don't know about everybody, but most mothers will not collect rent, from their kids. So they don't factor in the rent. They'll keep selling cake without including the cost of the rent. But just because you're not paying it doesn't mean it's not part of your cost. It is your cost. But on the cash flow side, it's not coming out. This is the difference. But it should be in the cost. So that tomorrow, if your mother says, move out, this thing is too much for me and it's stressing me out, you need to go and get your own place, right? And you move out and you now have to pay rent, then your price of cake goes up and your customers are like, what the hell? This is how you lose customers, because you are saying, no, I have to cover this cost. But customers are like, I don't understand why you're charging this much money. Then people think you're dishonest. And then it creates a reputational issue. So I think basic things like this is very important for businesses. And this is something they can learn on their own. But also accessing structured, I think, learning programs, from learning providers, I'm sure, like the likes of Tungsten, becomes very important. And as much as possible, as my nephew would always say, ask Mr. Google. But I think that has now been replaced by Ask ChatGPT and Ask Gemini. But we need to be able to do that research for ourselves. And then I think I would say, lastly, I would mix it with partnerships and diversification. A wise man once said, do not put all your eggs in one basket. I think we all grew up learning that adage. It's very important. Diversify your product base, because the world is changing rapidly and you do not want to be in a situation whereby you are a single product business. It's good to focus on few things. I will also caution businesses from not doing too much, because some businesses are all over the place. They're trying to do too much and they stretch themselves. It's a bit like when you go to some restaurants and then you order food and then they say, we've run out, ma'am. And then you check something else on the menu, we've run out, ma'am. You're like, half of what is on this menu is not available. So you've done this to attract customers because you want to be everything. You want people to say, they have Chinese, they have Indian, they have Nigerian, and they show up. But then you can't keep up. So yes, it's good to cast your net wide, but as a business owner, you should also learn where the points are for your customer base. What are the best sellers, as they call them? And then narrow down. Specialize on those things and make sure that you're very good at them, but make sure they're diversified. And you're selling to different types of customer bases. So if, God forbid, anything happens in that location, or that specific type of customer, or that specific type of country, you're not out of the market. But when you over-specialize and you put all your eggs in one basket and you don't manage your risks, what ends up happening is if something bad happens to that customer base, you lose everything. So these are some of the things that also businesses have to think about in the way they manage. So diversification, risk management, cast your net wide, but not too wide that you're all over the place. But at the same time, don't be a single product, single service business, or single market, single customer, single vendor, a single anything business is just a bad idea. so that you diversify what you're doing. And it doesn't have to be under the same umbrella of business. You can set up different businesses. There are many ways to slice and dice it, but I think that becomes important. And then you partner with other people. Don't try to be everything. Look at how you can add value by working with others. So if you sell, for instance, um, bread, be around vendors or partner with vendors that sell tea items, eggs, other things that people will consume with bread. So when people are checking out products from you, they can now see that, oh, by the way, there are other things available. It's not offered by me. They're just my friends. Okay. And then suddenly people are like, okay, this makes sense. Even for that reason, people may want to just patronize you because they feel like you're a one-stop shop. Because you've thought about it. But don't try to backward integrate into everything yourself, because it can be a crisis waiting to happen. Just look at partnerships, work it out, and then if there's a basis to add that to your business in the future, do it. But it's all about, like I said, managing your risks, diversifying, looking at ways to be able to ensure that the business is sustainable, is resilient, and that it's not putting your eggs in one basket, essentially. That, I think, with cash flow management or working capital management and, as I said, digital transformation, I think 3 very simple things that businesses can do to survive and scale.
Those are actually very interesting strategies. And with the examples that you gave, people like working towards expanding their market or even catering to markets outside, like the example you gave with the British Airways and all that, is something that I think of recent, but even in the past few years, entrepreneurs and business owners have tried to cater to an outside market, like market outside of Nigeria. And why I'm mentioning this is to know from your own perspective and all the other clients and companies you serve, are there any strategies that you find to handle issues of FX, foreign exchange? Because it's a very key thing to business owners that affects them. Any strategies that you have to cater to, for them to really handle challenges of foreign exchange in whatever country that they.
You're quite right. It's a very hot topic, FX. Unfortunately, emerging market economies have been going through a lot of stress generally. And FX is the value of a currency is inextricably linked to the trade in that currency.
Of that country.
Exactly. And the trade of that currency is linked to the trade of the country. Exactly. Or in how many countries that currency is being used, right? So if your currency is only used in your country, then it's directly linked to the trade in your country. And that's something that, you don't really have control over as a business owner. Obviously, it's about government, it's about a lot of things, and all that. So what you can do is just manage your exposure to it. So you always have to look at your cost base. What amount of your cost is linked to foreign exchange? To what extent do you need to import things or pay for services in a foreign currency? So this is the key. And you must ask yourself how you can reduce that exposure. Because that's the only thing you have control over. You don't have control over how the currency moves. You only have control over how exposed you are to the currency. So if there's a vendor that can make the same things that you have, that you're importing, then
in terms of raw materials,
yes, then you should buy them locally. It only makes sense. Now it comes with it. Maybe it may come with its inefficiencies in that raw material producer maybe is not as big as the foreign one that you are importing from, and maybe you have to wait longer for it. But that's where you plan. So if it takes you a month to import something using FX, but there's a local vendor that can make it, but it takes 2 months, again, that's where the cash flow management comes in. You have an understanding with that vendor that, okay, this thing is taking a bit longer, but I'm patronizing you because XYZ. So how do you give me a good deal? Maybe I'll pay for the things after I receive payment for my own products when I've made the thing from the raw materials, right? So those are some of the things, for instance. Or you look at how you can outsource that importation to somebody else. who's a bigger player that has more money, more lines of credit, more things to be able to import and then sell to you. So they're like a wholesaler. Then you become a retailer. It may end up costing you a bit more, yes, because you're passing that importation capability to somebody else. But it's at the benefit of reducing your own exposure because you've passed that risk to the wholesaler and you said you deal with accessing the FX. Just bring me it, bring me the raw materials, even if it will cost me a bit more, I'm okay to pay the extra because I don't want to bother about looking for FX. So things like this, you must also think at places. You can also look at banks. So if you're a large business that large enough business, you can actually go to a bank and ask for a letter of credit, ask for facilities where they will guarantee certain rates for you for a certain period of time, or they can give you import discounting facilities, import financing. There's all sorts of facilities that banks have around this. But of course, you have to get to a certain scale to be able to access it. But I'm not even sure people who are importing huge containers of products today, even on the continent or in other parts of the world, are aware of this. But it's something to definitely look at. A lot of people are afraid of going to banks because they think banks only give loans, but it's not true.
And also the requirements.
And the requirements, exactly. You have to formalize it, but that's the price you have to pay if you want to access facilities, tools, services to help you manage your foreign exchange exposure. I think another thing maybe lastly I would say that potentially I think people can do to manage their FX exposure is also looking at ways to earn foreign currency. So if you are a web developer and you're selling services in Nigeria, well, why don't you open a Fiverr account, a freelancer account, Upwork, whatever, and sell the same services? So the income you're receiving in the foreign currency can be used to offset some of the costs that you have in foreign currency. Same thing as well if you were importing something, raw materials, to make, let's say, shoes in what we all know as the famous Abba in Nigeria, for instance. If you're doing that, then you should think a step ahead to say, how do I go to National Export-Import Bank, the Standard Organization of Nigeria, whoever the bodies are, the regulators, to certify my shoes or bags or whatever it is I'm making to be export ready. So I can sell it to Ghana, I can sell it to Liberia, I can sell it to Europe, and also make foreign currency. So though I'm importing the leather and all the things I'm using to make the shoe in Aba, I am selling part of it outside of Nigeria, so I can earn FX. But again, it will take a bit of effort for me to formalize my business, improve the quality, improve the standards, improve the packaging. You have to have that mindset of progressive, progression, of value creation, value addition, for you to be able to. But it's not an easy game, and it's not when you just wake up and think that you can mitigate. You can't. You have to work at it. But I think businesses who really want to use some of these, approaches too.
Okay. That's actually very interesting because, as we know, like in an economy like Nigeria, it's something that has been affected or affecting business owners a lot. FX issues. My next question is going to be from the perspective of government themselves, whether it's at a local, state, federal / national or continental, and etc. For any government, I understand that an entrepreneurial ecosystem is very important. As they always say, the MSMEs, they are the backbone of every economy. So it's important for them to thrive or do well wherever, under whatever government that governs over them or regulates them. What are some of the, if I can say, maybe the interesting things that you've seen being done by governments, any part of the country, any part of the continent, by any level, or it can even be outside of the continent of Africa that you've seen they're doing well in terms of creating a thriving entrepreneurial ecosystem? And also, what do you think can be done more, even though you may talk about the best standards that you have seen, outside of the continent, as far as entrepreneurial ecosystem being enabled by a government? It would be good to also know what more can be done, or maybe even what you foresee that is going to happen. in terms of opening up this space so that the economy of that government or that locality that they govern over can improve, you know.
No, you're quite right. I think I would put them in three categories: regulation, policy, infrastructure.
All right, regulation, policy.
Yes, and I mean this is the bread and butter of government. So everything you can think of the government can do, I think fits there.
Yeah.
When I say I'll take policy and regulation together, is thinking about everything a business needs or an enterprise needs to thrive.
Yeah.
And it's down from everything. I mean, when people keep using these buzzwords, ease of doing business, ease of doing business, you know, and it shows itself in many ways. So even something as basic as how to set up a company, how easy is it, you know, to do that? When I think of when I was helping my sister to set up her vehicle in the UK, it was very straightforward. You just go to companies UK, you search the name. If the name exists, it will tell you it exists. You should see all the businesses. You can click it. You can see when they last filed their annual returns. Are they active? Are they not? Who are the directors? Nationality? Everything is there. It's publicly available information. And you can just 1, 2, 3, 4, 5 few steps you set up. Upload documents, whatever. You get a response within days. So even something as basic as that can deter or encourage somebody to exist within an entrepreneurial ecosystem. And I think lots of countries have done well in this, with the likes of UK. There are certain countries, states in the US, Rwanda in Africa is now doing it, Kenya, South Africa. There are a couple of places that are really pushing. I think Rwanda is, you can get, I don't want to be misquoted, but I think in a matter of like weeks or something, or days, you can open a new business. You know, things like that.
Like how Dubai.
Yes, exactly. Very efficient.
They create special economy.
Yes, which was the other thing I was going to talk about. Yeah, I think that's more on the infrastructure side. But yeah, exactly. So just basic things like that can go a long way. And you're thinking of a tax structure within your country is a huge thing. What kind of incentives do you have for certain industries, for certain locations, for certain types of businesses by certain types of people, so like young people or informal sector, you know, things like that. If you can make it tax friendly for them, it can also be a huge factor to bolster the ecosystem. Singapore is a very good example of that. Dubai is also a very good. Mauritius is a good example. There's some states, Delaware, for tech companies, for instance, in the US. So there are a few places that have caught up onto that, and they're really using that to be able to attract investment into their country. So I think tax is a big thing. It's a huge thing. The amount of the kinds of licenses you need, how streamlined is it? So a good example, I think, for us was in Gabon when we set up the first special economic zone that was based on forest wood-based special economic zone. The commercial, industrial, residential facilities are all in the same space, over 1,000 hectares. And one of the key things the government did is to basically co-locate all of the key ministries, departments, and agencies within the zone in one building, one administrative building. And then they called it the single window clearance. So if you need anything, it just goes through one window, right? So whatever you need takes a matter of days, from driver's license for expats to immigration permits for them to be in the country, or even the locals that are there, to licenses that enable you to be able to process wood, for instance. Anything you need is just from a click of a button. All happens digitally, all through a single window. You get all your approvals, all your licenses in a matter of days, 2 weeks, on the same platform. So something as simple as that was so enticing for so many of the investors. We ended up having over 100 investors actually now who are hosted in the zone. And they're all from various parts of the world, you know, Asia, Europe, and the Americas. And they're coming and they're investing in Gabon, you know, pouring billions of dollars of capital, you know, into this very small country and also the zone. So even things like this, again, the ease of getting approvals for things, the ease of license, even knowing what kind of license do I need, becomes a huge difference. So governments putting up information portals on their websites. So when you go there, you can see that, okay, if you want to set up a mining business, these are the list of licenses. These are the people who are supposed to give you these licenses. This is how long it takes. These are the forms you need to fill. Just basic things like that can make a huge, huge difference, I think, to promoting the entrepreneurial ecosystem. So I would say that under regulation and policy, and then also putting friendly regulation, not putting laws that are very just rigid and not providing exactly too difficult to navigate, too difficult to interpret also, and leaving it open to all sorts of, convolutions and things, I think is another key thing. And then just promoting policies that are very friendly. So like I said, saying we're supporting businesses that are in X industry, for instance, by giving them access to grants, access to this, access to that. These kinds of policies I think are also useful. We've seen that in the likes of Rwanda also for technology and a couple other countries. So that's the regulation and policy together. The other part of it is the infrastructure. And the infrastructure is what I call enabling infrastructure. And it's of different kinds. So you spoke about the hubs, creating startup hubs, like the likes of Silicon Valley. We see that in Lagos now, in Yaba. There's another one being built called Alaro City. So there are a few here and there. Rwanda also has a huge startup space that they've created, like a hub where people can go and do things. Dubai is a very good example of all those free zones that they have: internet city, media city, this city, that city. So all of those things are very critical, yes. They have a huge space, but also just general infrastructure that is going to enable different businesses. So for instance, what's the level of technology penetration in your country? People keep saying use technology, but if you don't have fiber optic cables that are running up to the last mile in the rural areas and the smaller communities, then people cannot access it. I can't tell that being cake seller, who's in a peri-urban or rural community to access technology because there are no masts or towers that she can leverage on. So government can help to subsidize. So a lot of governments have done this in Africa, in Asia, in Latin America, where they subsidize telecommunication companies and say, I know it's not commercially viable for you to pass this border, but take it another 10, 20 kilometers because I want the people in this rural community to have access to the same technology and also to be able to make phone calls and things like that. And they basically subsidize that telecommunication company to do that because, like I said, it's not commercially viable for them to do that. So little things like that is where I'm talking about partnerships between governments and private sector to build infrastructure. Roads becomes very important. Rail, to move goods from point A to point B. If you do not have connectivity, whether it's digital, voice, or physical, then businesses cannot thrive. Entrepreneurship cannot thrive. I think Dangote gave a classic example in the early days when he started the business in Nigeria, and he said it is cheaper for him to import cement across the world from China all the way to Nigeria, down to the retailer that will sell it to you to go and build your house, than for him to transport it from one state to another in Nigeria. It makes no sense. DRC is so huge, and it only has maybe couple airports. So to move from one city to another, it takes you literally days. I can't trade within the country. There's no point because it's so costly to move out of my locality. So little things like that, I think governments can help with. Building airports, building roads, building rail, building ports. Ports on the sea, ports in the dry land. All of that enabling infrastructure is very important for enterprises to thrive. Otherwise, it makes no sense commercially for any private sector organization to come and exist in that space. So I think this is where the infrastructure becomes key for governments to really start thinking about how they plan, and opening up their countries to say, where are the places where businesses, the big businesses should exist? Where are the types of industries I want to grow in my country? And what are the gaps that are not enabling these places to be able to thrive? And how can I do a massive infrastructure program to just build this? Because this is what South Korea did, this is what China did, this is what Brazil did. Let's not reinvent the wheel. It's just what it is. You have to do that work as government. That's something that nobody else can do for you. And even if it's not you financing it, it's about mapping out, putting all the structures in place, putting your own bit of small capital into it, and then calling private sector to say, I've done the preparation. Now I want you to come and execute. It's fine. Nobody is saying you should fund everything. But just put the things in place and create the opportunities so that you are incentivizing and attracting private sector or development sector to actually come in and support you. So that's what.
Yeah, and I'm surprised. Maybe you forgot one key thing that I always hear people complain about MSMEs, which is electricity, power, right? Maybe you can speak a little about that, because I think some of the projects that you have done have to do with power. And even like right now, where we exist in Nigeria, I'll be more incentivized to go